So your views on the market's performance? Some would say with the ICC indictments, the worst is over by way of what we can expect by way of political risk, and a laudable stance on the part of the finance minister to step down. So from here it ought to be smooth sailing, or is that overly optimistic?
Well, it's always a pleasure to be on board. I think what would happen if you look at the cycle or the market cycle is all those pointers a key indicator of a mature democracy and an environment where that slowly delink a bit of the politics from the business. But it also goes to show you that those in power realize the correlation between the two, that one will affect the other, and hence, like I always mention, that we are no longer an island. We are actually connected with the rest of the world, and one small occurrence or situation will have a knock-on effect on various sectors of the economy and the stock exchange for a whole, because you find that a lot of institutional investors, international investors do play a key role in the stock exchange. So those are some of the things that they look at the bigger picture as opposed to just looking at internal matters.
I mean, obviously, because we're headed into an election year of some sort, at least an election period, probably is better to say, we are expecting to see a lot more government borrowing, though the government insists it wants to scale back. That's starting to reflect a little bit on Treasury bills, for instance. We're seeing the cost of borrowing down, we're seeing yields declining. What does that mean ultimately?
Well, you'd also have to look at it. Yes, going into an election year, the major expense for the government is normally running of the elections. And going by the news, you notice they got some help from the UNDP and things of the sort. What would be of a key issue is that the market sentiment. Usually, as is tradition, whenever we get into an election year, there are two parties. One camp that looks at that it is a very good period to invest in terms of a lot of prices for stocks will end up being more bearish and hence ripe for the taking. Then there are those who look at it from the point of view that this is a point where I need to exit and hold or take a hold position as opposed to having active trading. So those two camps more or less will be influenced by the way the markets would, by the way the government or the general actually camaraderie or the general view within Kenya with regards to the elections.
All right. So, again, this question, we ask it perennially. If the market has slumped, and some have said it's bottomed out, it cannot go further than what we've already seen. The greatest returns have been on the fixed income side. But what we started to see near the end of last year was almost parity, is that you weren't really getting good returns on government securities, largely because interest rates were at their highest, and that pushed up T-bill rates and the costs on that side of the economy, and valuations at their lowest. You weren't really going to make much on the equity side. What trends are we going to see this year?
Well, one of the key trends you'll find out is the monetary policy committee of the central bank will be very, very key in actually balancing the two, because if you look at it, it's almost like a seesaw effect. When equities are performing very well, you find that fixed income securities will not give a very good return. But when you need to balance out the two, because you need to balance out the government's fiscal policy, maintain its borrowing, and then also bring out, you notice the trend they've been doing is sweeping a lot of dollars from the market to stabilize and hence ensure there's a bit of trade. But the flip side is that when you cut down on that, you notice interest rates, yes, have been actually very high, and what that does is the knock-on effect is that it really prevents a lot of small businesses from accessing continuous credit, and that more or less shuns growth in the economy, and people end up not spending. So it will be a very, very tight balancing act to follow, but so far they've shown they have the mettle to do it, and they've taken steps to balance it out. But generally, it is an election year, so there's always that sentiment about it. We lead having in mind the bitter taste in our mouth from 2007, so there's that element of let's wait and see. And usually wait and see means I will not take any approach until the matter is resolved.
Quickly on the equity side, Waiyaki, Mashudu talked us through Co-op Bank going up 5%, Crown Badger continues up, it's been up for the last 3 sessions, and also Nation Media Group up 3.6%, and of course due to higher passenger figures, KQ looking a little more attractive. Top picks for you?
Well, I would say I would not shun KQ, I'll not shun Co-op Bank, but I would also look at Kenokobil. Kenokobil is a very good pick whether or not price regulation is actually in the market with regards to fuel. Ken Okobil has shown that time and time again, owing to diversity, at the end of the day, you're able to spread around in terms of your return on investment. And two, it's able to buy in bulk. And also in terms of its approach of its outlets, it has actually proven to be a very well-managed company. So I would also look at that. And lastly, as the last tip, I would not forget Centum Investments.